Welcome, and thank you for joining us for Workday Chats. I'm Arima, your host for today's discussion. If you have any questions, please feel free to share them in the comments below. Today, I'm joined by Tom Peff, Director of Product Marketing at Workday, and a former FP&A practitioner turned marketer.
Hey, Kai, thrilled to be here today.
Thank you. We're also joined by Jamie Weidner, Managing Director at Deloitte, specializing in the finance and EPM space, if I'm not mistaken.
Hi, everybody.
Thank you both for being here. Well, I'm excited to have this conversation with you both today to discuss strategies for the finance leaders in our audience to drive agility and deliver strategic insights to their business. I'll start by saying that planning across the enterprise has never been more critical to navigate continuous change and make agile data-driven decisions. And an interesting fact, a recent Gartner study found that by 2024, 70% of new FP&A projects will become extended planning and analytics projects, or XP&A. So starting with you, Jamie, how have you seen companies integrate company-wide planning? And perhaps maybe you can share some of the best practices and strategies that can benefit our audience.
Sure, and thank you for having me today. We're seeing a lot of our clients really, get real about driving business partnering through the financial planning processes. And so, that means spending a lot more time with commercial leaders and really understanding what's going on out in the field and how products and services are selling and how those are translating into the models that are being built out in their planning and forecasting tools, and making sure that the models are working in such a way that really allow the business to provide insights, and that finance is quantifying those insights and understanding what they mean. And then those commercial models are driving into the supply chain requirements and driving manufacturing and other logistics. And so that we're really saying sort of, how does commercial drive what's going on in the supply chain? How are those driving into our P&L and articulating themselves in gross profits and gross margins? How are we using all those insights around the commercial and supply chain requirements to better partner with the HR organization to make sure that we've got the right mix of resourcing to support those commercial and supply chain organizations, both through contract labor as well as full-time employees, and what gets insourced versus outsourced, and really sort of having finance play the role of principal orchestrator in those processes, so that finance is connecting the dots, not being a parallel organization, providing yet another view on the same set of information, but rather adding that financial context and bringing together the income statement and balance sheet impacts of those business decisions, and being able to do it at a speed that's far more expeditious, and driving clarity for business leaders to the financial outcomes of the operation and strategic decisions that they're making. And we're seeing that across the industry. That's not one place, that everybody's wanting to have that dialogue about how we really better ramp up business partnering and speed to insight.
Absolutely. You just covered kind of the end-to-end of the spectrum of planning. Tom, is there anything you want to add to that?
I think Jamie got it all. And like you said, in terms of how we see folks sort of implementing that from a planning process, tool, model perspective, I think very often it starts with finance. That's probably the most mature market from a planning tools and heritage there. But really the GL, it's a target setting exercise. Fundamentally, there are typically way more important operational metrics that are like living behind and driving a lot of those financial results. And so while you typically start with a financial plan and model, we see very quickly across all different sorts of vectors. So Jamie was talking a little bit about on the supply and operations side. Same goes for if you dig into sales and what's driving bookings and quota and territories, workforce. So the people requirements of the business, on the marketing side. And as you get sort of deeper into those operational sides of the business, very often you get a lot more granularity that maybe doesn't even exist in your core chart of accounts and general ledgers. So your marketing, for example, you may get a set of natural accounts that finance forecasts across a set of cost centers, but hey, they're thinking about it at a level of granular around campaigns and events and things that, are kind of operating at a different level of granularity. And so those models need to sort of exist and be owned and supported, and also connect and tie back to the core financial models. So, as far as implementing it, we'll see folks typically start in finance and then, creep into whatever the operational pieces of their business are that are sort of material and drive things.
Yeah, one of the things
Absolutely.
we're seeing come across a couple of different channels is the desire to get a lot more connected to the digital outcomes of various digitized products. And so that may be, customer analytics coming off an e-commerce website, or the data coming off a digitized product, where you've got a consistent flow of data coming in from a device like a diabetes monitor or something like that, where organizations are trying to figure out how to translate the digital stream of data coming off their newest products and have those then inform their commercial and supply chain thinking in the way that they're able to forecast based off that stream of data. And, finance is used to thinking in, quarters, months, and weeks. And when you talk about, digital products and digital services, you're talking about things that are coming in a constant, steady stream and flow. And like, it's requiring a fundamental rethink about, the nature of forecasting, how autonomous those various activities should be. And, where are we creating value versus noise as a finance function?
Yeah, I think, to kind of maybe fight with you a little bit, Jamie, I hear you in terms of a lot of difference in terms of the data, the time granularity, the span, that kind of stuff. But, there really are some kind of good old fashioned, blocking and tackling best practices on the finance side that then we're applying in a lot of these operational contexts. Just something as simple as, hey, in the same way as I have a budget and a forecast and an actual and a variance explanation, along a GL account like T&E expense, I'm doing that same, applying that same financial rigor. Here's the plan, here's the budget, here's the actual, here's the variance. Explain to me what happened to some of those operational metrics.
Absolutely.
Absolutely. I mean, I think just touching on things that both of you guys have said, planning and data exists across the organization in every department, and we'll never get away from that. I think the key is in integrating that planning and bringing it all back to a financial plan that aligns with all of those different areas. And what I've seen is that the more integrated that planning activity is, the faster you can execute as a company. I think, Jamie, you mentioned this too. It really speeds up execution. I think we've all lived through it, where you've got one team modeling a number, you've got another team modeling the same number or something connected to that number, and you spend more time in those meetings debating the drivers and assumptions or debating the number itself, and you never get to the actual real conversation about strategy.
Checks and balances, Kai. Checks and balances.
Fair. But yeah, I think, this really speaks to the fact that integrated planning is so important, and it helps us operate more quickly as a company. Well, let's build on that and talk about workforce planning. So maybe, Tom, I'll start with you on this one. From your perspective, what role does workforce planning play as a part of extended planning and analysis?
Well, it's people. And so that means it's dollars. And it's typically the biggest one in any sort of organization. I would say, so even in sort of normal times, keeping track of your people is kind of one of the most fundamental things you're tracking from a budget planning cost perspective. And now, in kind of the current history, we have a whole bunch of added wrinkles in terms of remote operation. And so think about location strategies. We have this sort of great resignation and people struggling to fill and meet capacity demands. And so there's a lot of that sort of anxiety. There's the sort of wave of attrition stuff that's happened. And so that's kind of thrown what's a critical metric in normal times right to the center stage in terms of how we plan for it and execute against it from a business perspective. I think this sort of term workforce planning can mean a lot of different things to a lot of organizations. And while it doesn't necessarily have some of the history around it that you have in sort of a core GL corporate FP&A role, it's one that's getting a lot of attention, whether that's kind of the core headcount reconciliation, headcount planning, and cost exercise to as you kind of move out the maturity curve in terms of folks getting more, undertaking more complicated exercise when it comes to personnel. It's really a supply and demand exercise typically. So there's some demand for people, labor, jobs, gigs that need to be executed at the organization, and there's some supply for those things. And whether that supply is, what I can do with my current roster, what sort of hiring decisions I'm making, acquisitions, buy, borrow, rent, temp type stuff. So it's kind of funny. They actually parallel a lot of the operational type of use cases, supply and demand exercise from a modeling perspective that you see on the operations side are being applied to people. And whether that's, how do I deploy sales reps and quota and model attainment to solve for a revenue target, to how do I meet skills sets with certain demands from my organization from an HR perspective, or something just as fundamental for a lot of people businesses where what I'm selling is labor, so it's more of a staffing billing exercise.
Yeah, I would say that one of the things we're having a lot of dialogues with our HR colleagues from a finance perspective is about, how do we think about model that's a greater use of outsourced labor, contract labor, whether that's new talent models we're deploying with remote work as a result of the COVID-19 pandemic, whether that's how are we thinking about the nature of plant-based labor in our manufacturing sites, and should we be modeling that on a named employee basis or by headcount by plant? There's some age-old labor planning questions that will continue to stand the test of time about whether we should do things by named individuals or by headcounts by department. But there are also much newer questions about how do we think about sort of the nature of work and the use of gig and contract labor, all of which are informing nuances in the financial planning models that support the labor planning process. And as you'd mentioned earlier, Kai, like all these things rely on clean organizational data that come from world-class HR tools that allow us to start from a factually aligned and operationally consistent set of data.
Yeah, Jamie, it's funny. We in sort of the planning and FP&A area, we talked to a lot of FP&A folks out there, and one of the polls we throw out there, just a bit provocative, is to ask them to rank what's a bigger challenge / pain point, the financial close or headcount reconciliation. And I'll tell you, even in a finance audience, it's about 50-50. Yeah, I know, like shocking, right? The whole financial, and this FP&A, so maybe accounting has a different view, but the headcount reconciliation exercise it's sort of a bear of a problem, which is, hey, we put together a plan about what we're going to do. We all know best laid plans sort of never, go to script. And then what, finance and HR is really left with is trying to reconcile this, hey, this salary expense is off. What happened, right? And very few folks are able to unpick any of the underlying drivers. I'll have just a BVA at the top level. Maybe best case, I'll get, some FTE plan. And so then I can sort of get a price volume view, but there's very little understanding into, hey, this rec got up leveled, this position got, pushed out, this one got split, this one got unfilled, there were unplanned absences, any of those like underlying root driver causes. And that's really what's pretty exciting about some of the work that we're doing with customers these days in terms of helping connect HR and finance and being able to connect the underlying planning system with the HR transactional systems and even the GL to sort of offer that closed loop in terms of understanding how you reconcile against a plan that we all put together on what is our material and largest expense.
You hit on an interesting conversation that we have with a lot of our clients, which is they talk to me about what world-class governance looks like relative process to process, such that I can produce a consistent, reliable, trustworthy output in my actuals platforms that translates into a great starting point for my forecast, while also acknowledging that nobody could have expected COVID-19 or the transition to remote labor, all these different things that require us to be, flexible leaders in the finance organization, accept that what, worked really, really well in 2018 may not work very well in 2021. And at the same time, maintain, the consistency, the controls, the auditability of those processes. These are tough challenges for our clients and stakeholders to manage in their organizations, because you need both, right? You need a consistent definition of what a headcount is, and you also need to be able to account for what is in fact a rapidly evolving global labor market.
Absolutely.
Yeah, Kai, your data definitions there actually pops up. How hard can that question be? How many people do we have, right? And you get different answers.
Absolutely. I mean, I feel like we could just talk about this particular question all day. And I think there might be another event coming up about this topic specifically. So I'm going to table that. And Jamie, perfect segue. I'd like to switch gears and reflect a little bit on kind of the current macro environment, what's going on around us. As we've seen over the last 18 months, organizations that are able to adapt quickly to changing environments are better positioned to handle future disruption and uncertainty. So Jamie, let's start with you on this one. From what you're seeing, how are finance and operations leaders using scenario planning to gain greater business agility?
So I think, what we're seeing leading organizations do is be able to take their long-range financial plan and really, push a couple of different scenarios through those planning processes as a revisit very quickly, measured in days and weeks, not months, to go back and ask the question. I think most of the world's financial executives going into the beginning of the pandemic, nobody had a crystal ball as to what this meant to their business, right? There was, you could have all of the historical data in the world that wouldn't tell you what a global pandemic would do to your financials. And I think that there's, the economy broadly has done very well throughout the pandemic. I don't know that was sort of the, when you were redoing your long range plan in April of 2020, that's what you were modeling against. And so being able to have the set of tools and capabilities, which is, show me a level playing field with what we thought it was going to be 5 months ago, show me, a significant drop and what that might be, and show me, significant gains. And let's talk about, those scenarios with the various commercial and supply chain leaders within our organization about what are likely cases and what that might look like differently, and what are the choices we can make now to, preserve capital, but also what are the choices we may need to make to be able to ramp back up quickly. And, finance as a core enabler of the transition of those choices into financial outcomes that we can trust if the underlying business assumptions actually yield those outcomes is a big part of being able to do scenario modeling in an XP&A environment where you're actually having the conversation in the context of the changing business environment and the range of potential outcomes that allows the CFO and the CEO and their respective leaders to look at those and make tough calls that have big impacts on their organizations. And so that really starts with having confidence in your financial planning processes to produce reliable insights in the scenario planning environment when you're looking at your long range planning cycles.
Yeah, Jamie, you mentioned something there that I just kind of echo, and I heard customers say this just the other day. It's about tough choices, and walking the line was sort of what he called it. And organizations have had difficult time making difficult choices. It's like, do I need to furlough? Can I meet payroll? Am I going to breach my covenants? And so having a clear understanding of what different choices look like in reaction to outcomes and a world that is uncertain at best is really important. And it's kind of as folks sort of look back and how they sort of navigated some of this uncertainty, that I can't tell you the number of folks, gosh, if I didn't have this, planning process nailed down, I'm not sure how we would have survived now that I'm, went from doing a forecast maybe, once a quarter or maybe half year even to, weekly, daily cash, flash kind of things. So, it's difficult choices, right? And you're operating against, a set of financial constraints or targets. and how you kind of understand the ramifications of the different decisions, planning models and actuals that are real time are invaluable.
Absolutely. I just want to kind of ask a follow-up on that. You mentioned you're hearing customers do sometimes weekly, monthly, more frequent cycles. I'm curious, Jamie, are you seeing that as well from your customer base, and what's the frequency that you're hearing? It's certainly not annual anymore.
It depends on the nature of the business. I would say that more and more of our clients are finally really getting serious about rolling forecasts and connecting one forecasting cycle to the next, and using, a progressively more data-based process to drive a progressively better starting point for the dialogues with the business partner, right? And so, there are clients that are out there looking at, far more frequent forecasts. There are also a lot of clients that say, what we need to do is continue to sort of work the process we put in place better and leverage more unbiased data sets to be the point of entry for a dialogue about, what does it mean to add a plant or acquire a product line, or, drive some of the most strategic choices in the portfolio, because we really trust our forecasting processes, and they're providing us the insights informed by the data we're seeing on the ground as we enter those cycles. So there's a desire to shorten the forecasting cycle, and also to increase the use of operational and third-party data to drive those, at least point of entry for financial outcomes.
Absolutely, makes sense. All right, well, let's move on to talk a little bit about the future of finance and planning. Tom, I'll start with you for this one. So how are you seeing intelligent automation, machine learning, predictive analytics? How are those things shaping the future planning from what you're seeing? Or your
I'm a little bit biased here, but just personally, I think it's like one of the most exciting trends, and has the ability to materially impact day job for financial professionals. And what I mean by that is, even the best of models and the best of processes are still, still a bit manual, honestly, and both in terms of their setup, the creation. You're building a model and specifying a bunch of formulaic relationships, and you're toggling drivers, and then seeing what that means for sort of output. So the ability to sort of instantiate a plan based on historical data without forcing a planner to sort of build and structure all that stuff is really attractive and tempting. And so it's a question of how good are the algorithms, and how good is the back testing, that kind of thing, to be able to put a starting point. Jamie, I like the terms you're using in terms of the base case in place, and then let me toggle drivers, set targets, and see what that means for sort of confidence intervals around certain outcomes. But has the potential to be kind of revolutionary. We're starting down that path with a bunch of customers, focused mainly on kind of core GL data that's fairly structured, and then also a lot of interest around kind of demand planning use cases where you have high volumes of sort of consumer-y type data there.
Yeah, I would agree definitely on sort of the demand side of the equation. In most of the market-facing industries we serve, right, the planning cycle tends to start with some construct of demand, right? And that demand then translates into gross sales and net sales and cost of goods sold and so forth. And so if you can build out really great structured processes around demand planning, and then layer on top, the more robust capabilities around modeling, predictive, machine learning, all of those topics. I think one of the things that we're seeing as our client organizations get more and more serious about this, and I mentioned it earlier, is the criticality of governance around those data sets, then also building the skills and capabilities in their organizations and retaining those people so that they can, tend to the learning journey of those models, right? Because a lot of what our clients are doing is building the data repository on a common data model upon which they can then build the skills and capabilities to go build those regression models, because a lot of it is a never-ending hunt for better fit of a regression model that can take historical data and produce a reliable trending outcome. And that's a unique skill that you have to understand the markets in which your business serves, the nature of the data which you're requiring, the likely usability for time horizons, and then an innate curiosity to consistently improve those models. And the fact that you produced a really great one a year ago, you kind of have to continue to tend to it like a garden and learn what makes it better and makes it better and makes it better. And so it requires a intellectual curiosity and innate understanding of business, deep finance knowledge, and a really, really robust comfort with large data sets in various tools. And so I think putting that secret sauce together continues to be, it's tough. Like it's a huge
yeah, Jay, I'm gonna take issue with you on this one. And it's like, man, it's been a long time since I did, even like econometrics in college. But I don't know. Like as a vendor, at least one of the angles we're taking is sort of like, hey, do some of this heavy math for me, or reach out to somebody like Jamie at Deloitte and get some help.
Yeah.
to train your algorithm.
Yeah.
Well, it's interesting, kind of touching on both of your points. I couldn't agree more in terms of data governance, data cleanliness. It is the foundation for everything that we're talking about in terms of the future. And it is such an in-demand group, within companies. I think the IT business technology organization is probably the most in-demand area, because they're really trying to get this data right for across the enterprise. For the finance professional, it's interesting. I feel like that skill set is evolving. It's also a spectrum of how much of the finance role is going to be kind of automated with these future technologies, and how much is the role going to just shift to more of the deep analysis, the partnering, the action planning, the strategic conversation side of the role. I kind of see it as, today, a finance professional does all of it. And that's why no finance person can ever take a vacation, a long vacation it is, at least. But I see it as technology kind of catches up, the balance of that mix of what a person is doing today is just going to shift more towards that kind of more partnering and heavy analysis, which could include what Jamie's talking about. So. Fascinating. Any more you guys want to add on this topic? All good.
It's certainly an evolving future of work for the finance organization. I agree with you wholeheartedly that like the role of finance will change, and that the predominant skill being Excel is already evolving very much and will continue to because our client organizations' planning and forecasting processes continue to mature. They tend to be more tools-based as they move into more cloud-based platforms. Those cloud-based platforms are quite a bit more scalable than what they would have been in their historical on-prem solutions and those sort of things. And the data volumes by which finance is using to make those decisions is continuing to get larger, more continuous, and available from more sources within the organization. All of those are the point of entry for finance to be the connector of what an operational or strategic decision within the business translates into a financial outcome. And there's a ton of value to be created by the finance function of being able to say the decisions that we're proposing making have these financial outcomes over these horizons, and here's how we should think about those from a risk and potential perspective. And the finance professional that can bring to bear a balanced portfolio of data skills, the ability to communicate and interact with business partners, and then translate those business decisions into financial outcomes will have plenty of value across a multitude of industries and various progressions in one's career.
Absolutely. All right, final question. So let's end on a fun one. What is the most important lesson you've learned in your planning journey? So I'm trying to remember who I left off. Jamie, we'll start with you.
One of the things I advise my clients all the time is it's sort of better to bend than to break, right? You've got to be thoughtful in what really matters and what you're trying to drive as you think about taking on, finance transformation programs, whether they be big or small, right? Really understand the outcome and work towards that outcome, and understand that there's going to be different puts and takes within your program and within your chosen technology stack that will require, different choices. If you can maintain sort of line of sight to the outcome that got you to the starting line to get you to the finish line, those tend to matter more than, individual points on the board along the journey of a program. There's a lot of people, and it's going to be a composite of those perspectives that get you to, from where you started to where you want to land.
Absolutely. How about you, Tom? What's the most important lesson you've learned?
Yeah, I'll fight you a little bit here. I say break it. That's how you learn. To be honest, particularly a model. I think what folks have learned as they do sort of retrospectives about what work didn't. They've seen their processes stressed in terms of cadence, the metrics they need to forecast. Getting into the operational sides of the business, and so I think you got to have a little bit of just acknowledgement. Hey, look. By definition, a budget is not going to transpire, to plan. I mean, that's impossible. And so you want to be thinking about, marginal improvement and rolling forecasts and having it be an evolving process, not just a budget that sits in a, crystal box up on the shelf and doesn't get banged on and tested.
Yeah, I agree, Tom. One of the things I had said to me is sort of in one of my very first days in consulting is like, no one does the same annual plan twice anywhere on earth, right? So as you think about sort of, finance transformation programs in the FP&A space, or your path forward, the flexibility and the ability to roll with the punches along the way is really, I think, important in designing process that can scale and flex and is inherently designed to tell the future. And so that's always going to require another flex, another wrinkle in the story each time you do it. So
100%. Actually, I'd say my biggest lessons learned, or most important lesson, is really kind of a combination of what you both just said, which is, the value of a plan is not really in the plan itself. It is the process that you get to the plan. It's this forcing function.
Tell that to the person running the process. Come on.
That would be me. I feel like it's really more this forcing function to allow teams to share information, to discuss dependencies, to talk about direction and align. And the plan is this artifact of that process. And what's interesting now is that it's no longer this annual thing. And as the world is changing, you're going to have to do that more and more often. And so it's really important now to make those investments to make that process light and lighter, and more integrated, as we've been talking about, because you're going to have to repeat it, and it's just the nature of what's going on in the world. So yeah, it's got to be flexible. It's going to evolve, and you really have to keep the big picture in mind. So, well, thank you both so much. I think we're out of time. Thank you for sharing your insights and for being here today. I know we're all busy, so really appreciate it. To those in our audience, we invite you to join us for Conversations for a Changing World on September 28th and 29th to hear from inspiring changemakers and business leaders who are making an impact. For more information, you can check the comments below. And thank you again, and join us next time for the next episode of Workday Chats. Have a great day.
Yeah.